Hey guys, welcome back to DCA. So I've been away for about a week or two now. During that time, I was creating an in-depth institutional grade report on Chainlink. As I truly believe that Link as an asset is highly undervalued at the moment, so I wanted to create a report which would fully detail the demand structure of Link and help viewers better understand how they should be valuing Chainlink and its immense market potential. You can find a link to that in the video description below. So obviously, while I was away working on that report, a lot has been happening in the market. So I just wanted to lay out my opinions on the market at the moment, the market dynamics, and discuss how I'm approaching everything that's going on. So if you guys like this type of content, don't forget to hit like and subscribe. You can also head over to the Discord channel to sign up for the DCA Index Risk Model. This is a free machine learning algorithm model I've developed in order to help identify market cycle peaks as well as bottoms. We actually saw using the DCA index model that when we were down at around 33K, we were at one of the lowest points in the market that it's ever been in terms of risk assessment. So we were acquiring more during this time according to our scheduled dollar cost averaging routine, which I've laid out in prior videos. You'll also be able to download the Link investor report, which I'll be posting there in about a week or two. This will be an even more in-depth report on the market dynamics of Chainlink, which are simply too extensive to fit into a single video. So with that said, guys, let's jump on in. So just before I took some time off to research the Chainlink video, I was talking about the overall market dynamics associated with the Bitcoin held on exchanges. In fact, on March 17th, I made a video which asked the question, is this your last chance to buy at these levels? This was when the price for Bitcoin was sitting at around 40.9K. Now, what was the evidence at that time that we were looking at, which made me suspect that we could potentially be in a more bullish period in the market, at least in the shorter term? Well, at the time, we were looking at multiple things. We were looking at Bitcoin held on exchanges, and we were looking at institutional fund flows for Bitcoin, Ethereum, and other top held institutional assets. And we demonstrated how these assets were in fact in a period of accumulation through the end of February and into the first week of March. So in my opinion, coupled with the extensive and protracted sell pressure that we had seen in the preceding weeks, we were due for one of these market reversals. So now what I want to do is direct your attention towards the current market dynamics in order to attempt to understand where the asset class as a whole may be trending. So let's start by looking at where Bitcoin is at the moment. And remember, we're looking at Bitcoin primarily for the fact that Bitcoin is the de facto market driver. If Bitcoin's doing well, the entire market will tend to do well. However, if Bitcoin begins to perform poorly, this will inevitably extend to the altcoins. And as we've demonstrated innumerable times on this channel, when Bitcoin starts to bleed, the altcoins simply hemorrhage. And it's important to note that the reverse is also true. When Bitcoin is performing exceptionally well, the altcoins are going to tend to do even better, especially the altcoins with the strongest fundamentals, the greatest value propositions, etc. So here we can see that Bitcoin has, in a big move on March 27th, moved squarely above this 20-week moving average. And recall, as we've demonstrated frequently, the 20-week moving average can be thought of as a proxy for whether the market is in a bullish condition or in a more bearish condition. However, it's not enough to simply get above this 20-week moving average. The true demonstration of market strength is when Bitcoin is able to get above the 20-week moving average and retest this level as a level of support. So if you think of this as a checklist, getting above this important technical indicator is priority number one. So we can consider that box checked now. So the second item is going to be coming back down and testing this important level as support. Now, truth be told, coming back down like we've done in just a few days' time, in my opinion, I'm not going to consider this as a true test of support of the 20-week moving average. So if we hold it, that's great. However, this will not instill in me the confidence that the market has recovered in any definitive manner. So when we say that we want to see a retest of the 20-week moving average, we're talking about being above this level and then coming back down to it on weekly timeframes. So coming back down with weekly closes and seeing support at the 20-week moving average. That would be a sign of strength in this market. So to just quickly illustrate specifically what we're talking about here, let's take a look at historical examples where we've done this in the past. So we've seen Bitcoin hold this level as support throughout the 2018 bull market. And you can see that illustrated perfectly here. And again, we've done this in mid and late 2020. And then we did it again most recently, actually in September. And notice every single time that we've done this in the past, even if you go back to market cycles prior to 2017, we've then went on to make all-time highs. But that's a key important thing you need to consider, that it's not until we come down to the 20-week moving average and show it as support, as a support level, because this indicates bullishness in the market. This indicates that the larger buyers are willing to step in and acquire the asset at that level. However, we'd be naive to not look at the alternatives to this. Because like we said in the checklist of things to do, getting above by itself is simply not enough. We also need to hold this level as support, because in numerous instances in the past, we've seen how losing this critical level of support typically spells at least several months of a market downtrend. And remember, this is in no way unique to the crypto markets. This generally holds true for the equities markets as well. Now, it's true that sometimes certain events, black swan events, may occur that will send the markets spiraling, and in these instances, the markets may quickly recover. Ultimately, the Russia-Ukraine event may very well be one of these such episodes. However, in my estimation, it's still too early to definitively say this one way or the other. So we can then direct our attention to the level at which we were just rejected. And this is right at almost the exact level of the 200-day moving average, which at the moment is sitting directly at 48.3K. So it's not surprising in the slightest that we were bounced off this level, because you have to remember that in these markets, and this is something a lot of people don't talk about, but I think it's so important, there are a huge number of algo bot traders who know these levels and are watching for these levels. So bots, in addition to these short-term traders, were very likely sitting on this level and waiting to take some profits here. So seeing a short-term rejection to me is completely par for the course. So this doesn't give me any degree of concern for a market recovery whatsoever. Now, this is very interesting, the position we find ourselves in, because we're currently wedged directly between this 200-day moving average just to our north and the 20-week moving average just to our south. So it's very interesting to watch this play out. Now, I would also just like to mention that losing this 20-week moving average and heading below also doesn't spell doom for any prospects of a market recovery. In fact, during the course of a recovery, it can take several attempts at this. While this is certainly a pivotal point, going below is not going to be the end of the world. We can come back above, but it just may take some more time. And the last thing I'd like to mention, if we're able to get above this 20-week moving average, hold it as support, get above this 200-day moving average, and start to see these moving averages trend upwards, rather than this flat position that we're seeing them in now. I think then you're going to be in a position where the market is going to gain a lot of confidence and we're going to be off to the races. And we'll very likely be in a position where talking about new all-time highs will certainly be within the realm of the conversation. It's also, if we're able to do this convincingly, that I would start to acquire altcoins. Otherwise, I'll just be sitting on my Bitcoin and Ethereum positions that I've acquired, as well as some of the smaller altcoin positions that I've obtained from May through September, and then some in January through the beginning of March. Overall, the risk-adjusted returns of these assets are simply too high when we consider that if this is a false breakout, the degree to which these coins are going to fall is usually much greater than that of Bitcoin, or even Ethereum for that matter. So hypothetically, if we saw Bitcoin extend down 50%, you may see these altcoins go down 70% or more, which is why we wait for a confirmed rally with Bitcoin holding the 20-week moving average, getting above this 200-day moving average, and then holding them as support. So that's going to be it for this one, guys. I just wanted to give my broad thoughts on the general market at the moment, and I should be back to my usual video release schedule now. So I'd like to thank you all for watching this. I hope you have a great day, and that's it. Until next time, as usual, see you.